If you held Salesforce Inc. last week, your $100 is now worth $88. Here is everything you need to know about last week's biggest stock moves and what to watch when the market opens Monday. 5 stocks, all names you know. Big names rarely drop this hard. Something may be shifting fast. Number 1, Salesforce Inc., ticker CRM, down 12.0% this week, closing at $164.96. Salesforce tumbled after its earnings failed to impress, with guidance and signs of slower enterprise demand amplifying the drop. Heavy volatility across tech and investor sensitivity to macro headlines contributed to the pressure. Traders will closely watch if buyers step in at these levels or if further weakness drags CRM lower. Monday's open will be key for sentiment, with volume and any news flow closely watched. Nobody expected this breakdown. Bulls are demanding answers this week. Number 2, Adobe Incorporated, ticker ADBE, down 7.2% this week, closing at $225.35. Adobe sold off sharply as macro concerns and talk of cooling digital spending swept through growth stocks. Investors are nervous about the software sector facing both economic headwinds and potential AI disruption. Watch for stabilization near current support, but another wave of selling is possible if risk-off sentiment persists. Analysts will be watching guidance and any updates from management closely this week. Long-time holders are sweating after this unexpected move. Number 3, Oracle Corporation, ticker ORCL, down 6.3% this week, closing at $138.09. Oracle got swept up in a tech sector downturn, accelerated by analyst downgrades and heightened macro uncertainty. The stock's unusually high weekly volume suggests large funds may be repositioning or moving to safer ground. Watch for whether buyers defend the 135 to 140 range, or if stop losses trigger more downside. Monday's opening action could set the tone for the whole tech sector. This sell-off is making waves across tech. Is panic setting in? Number 4, Shopify Inc., ticker SHOP, down 5.9% this week, closing at $110.79. Shopify shares slid as renewed tariff chatter and concerns about consumer spending dented sentiment around e-commerce. The move may reflect broader sector rotation out of growth and retail as macro uncertainties take center stage. Investors should watch for a possible bounce if risk appetite returns, but further downside remains possible if global headlines worsen. The opening minutes Monday could indicate if panic selling is over. For this stock, every penny down here matters. Nerves are high. Number 5, Pfizer Inc., ticker PFE, down 4.5% this week, closing at $26.92. Pfizer continued to grind lower as drug makers faced defensive selling amid concerns about falling demand and political scrutiny on pricing. With limited good news and heavy volume, sentiment is fragile around these levels. Watch for any sign of stabilization or further downside if sector pressure persists. Monday's early trading will show whether defensive buyers are stepping in yet. That is your market prep for Monday. You now know which stocks got hit hardest and what to watch at the open. Subscribe so you never go into a market week blind. This video is for entertainment only and does not constitute financial advice. Always do your own research.